Good afternoon. I'm going to assume from Sajal that we have a quorum in order to be able to kick off this delightful next hour. I'm thrilled to be here on behalf of Kapitalwise. Pleasure to receive the invitation. My name is Elizabeth Laett, and I'm one of the managing partners with Holt Accelerator. We are also an investor in Kapitalwise. We spotted them early, roughly, sorry, roughly 2 years ago, and have been tracking their progress. I certainly find the area very interesting. I have a number of different investments looking at the digital journey from a banking perspective. I spent the previous 2 years in behavioral AI and applying behavioral AI to banking journeys. So certainly saw a lot of what I considered to be fractured processes that banks are wrestling with. I think as we head into 2021 and heading to 2022, it has been exceptionally exciting in the banking industry as we look at the impact of digital pressure coming from clients requiring services today that have had to been adapted very quickly. I'd like to take the opportunity to introduce our very talented and experienced panelists today. We have Ryan Zilker, who's the Chief Marketing Officer from Sound Credit Union. I've always loved the credit union philosophy across North America. I think they play a very, very important part in banking industry and that ability to be very close to their customers. Sound Credit Union, founded in 1940 and roughly Sound Credit Union has been around, I think we're heading almost to 60 years, and Ryan brings a tremendous amount of experience from the marketing side, and as credit unions manage to really keep that very personal aspect as they move into the digital channels is an exciting transformation that is happening. Matthew Smith joins us from Sterling National Bank. Sterling National Bank, founded in 1888. So we have a centennial level bank in terms of experience. Matthew heads up direct digital banking, has recently been responsible also for highly innovative banking as a service, which I think is very exciting. I gave a presentation the other day talking about Uber is the largest car fleet in the world with no cars. Amazon is the largest retailer in the world with, Alibaba, largest online retailer, carries no inventory. And then I put a picture up of the bank saying largest bank in the world and what was going to be that caption. So I think as we move more digital, definitely some interesting changes coming. And then we have Sean Parker, recently new member to Kapitalwise. Very excited to see Sean joining the company. He brings a tremendous amount of experience and background in wealth management. He's been a senior executive with multiple different tier 1 financial institutions. Like to kick it off today just with a little bit of what I consider to be the theme that's happening. I say how 2020 accelerated the industry. I think in panels that I've been giving, more than all of the healthcare in the world and doctors, and I applaud everything that's happened during the pandemic, but the primary lifesaver on a worldwide basis that have saved millions of lives is our ability to remain in a contactless society. There is an increased demand for financial tools because of that. I give much credit to many of the banks in the world who rapidly ramped up adoption and providing tools to their customers during this period. And personally, certainly contactless payment has been much appreciated from my side. I think, as we move into this faster pace of digital adoption, if you cut through any of the reports on banking today, you're certainly seeing that most banks are looking at rapidly over 50% in terms of adoption in their digital channels. The challenge is really about creating meaningful interactions and how we're going to sustain that engagement moving forward. I think one of the biggest things, and I'm really excited to get into this discussion with our panelists today, is technology is really a big obstacle. There's fragmented customer journeys. Banks have more data than probably any company in the world on us as individual clients. They see pretty much every transaction that I make and certainly can build those moments for us, and how we pull all of those different marketing solutions together to really look at what's inaccessible on data today in a customer's journey. I think really kind of to set the tone for this, we have what I consider to be very digital processes in place. But the question is, how do we get customers to sustain and engage in those digital channels and really create, what has been the challenge for multiple years is what I call moments of truth. The moment of truth is, right time, right place, right conversation, right product. And there's a lead up to that where it's just not synergistically looking to say there's an event in my life. You've got to maintain that relationship. So when that event happens and that moment of truth, that you're the person that I want to engage with. So I'll move quickly here in terms of really the questions. And for me, is our banks ready to start to serve, the fully digital self that we see migrating towards on an end-to-end digital process, from onboarding to account management to payment to follow-up to wealth management as we move towards those areas. So I'm going to stop sharing here and give a little bit more visibility to our panel. I think if I can ask Ryan, Matthew, and Sean to open up your cameras, great, wonderful. So Ryan, I'm going to turn it to you first, and I tried to see from a thought-provoking side. I think certainly that image of serving the digital self from a credit union's perspective, where I look really intimacy of relationship, and I think that's really what credit unions have been based on, the grassroots. What's been the experience over the last 18 months as you've had to progressively move significantly digital?
Yeah, Elizabeth, I think you nailed it in your introduction that it's been tumultuous. It's been a lot of unknown, undiscovered countries as we try to navigate the pandemic. So we're based in Washington State. We're about 2.4 billion in assets, about 140,000 members, 29 branch locations. So in the world of credit unions, we're mid-sized to medium large, but in the grander scheme of financial services, we're not a huge player. So when it came time to close our branches, we were scrambling, trying to figure out what do we do, how do we continue to serve our members. In the lovely rainy Pacific Northwest, we have a lot of drive-throughs, and we closed our branch lobbies and transitioned a lot of our business to drive-throughs. And I was amazed at the lengths that people would go to wait in line to get through the drive-through still. So we started trying to capture those folks to transition them to digital transactions. One of my colleagues shared a story that her 75-year-old mother was waiting in line for the drive-through and just exacerbated by the long lines, and called her to say, why do I have to wait so long to make a deposit? So her daughter walked her through the mobile deposit on the phone, and that was a revelation for this woman. She was unaware that it was available, which as a marketer hurts my heart that one of our members did not know that this product was available. But nonetheless, she learned it, and at 75 loved it and adopted it. So part of what we have found at the credit union, because it's such a high touch, we talk about members rather than customers or clients. Our members are so used to the high touch that it takes a person walking them through to get them kind of to start transitioning into that digital world. And I don't think we did as good of a job pre-pandemic as we maybe should have done to start that journey and start those conversations to get the members to transition over. We were really focused on serving the members however they wanted to be served. So if they come into a branch, we're going to serve them in a branch. Um, I think going forward, there's going to be a lot more focus on that digital alternative for our members. And as we kind of look towards the future, we've been talking a lot about, as branches are opening up, are we going to go back to the same level of transactions that we had been? And all signs are pointing to probably our branch volumes are ticking right back up as we are reopening. So now that we've got the members coming back in the branches, how do we start that transition over? And this may be an overused example, but if we all remember when airlines started going to the kiosks for check-in, and they would put a person out to help be a concierge to navigate through the kiosk check-in. And that was part of their conversion and their process to move their clients onto the kiosks for check-in. You could still wait to speak to a person, but it was a really long line. That's a model we're looking at right now to say, okay, are there more digital solutions we can bring into the branch to teach our members how to use them and start kind of that concierge hand-holding transition over, with the hope that the branches could eventually go to problem resolution, more consultation, and those day-to-day transactions really shift to the digital channels. That's been kind of our focus in the branches. And then when we look at our digital channels, I think, Elizabeth, you mentioned the disparate systems and the challenges getting the journeys kind of consistent. As a $2.4 billion institution, we don't have the infrastructure to build these things by ourselves. So we leverage a lot of partners. And in doing so, we have a lot of different experiences for our members and a lot of different ways to do things. And it's not ideal. So I think we need to look at kind of what's that presentation layer going to look like, and how do we make it for an easier, more consistent member experience.
I think that's a great summary. And one of the points that kind of triggered for me, there's a particular marketing positioning statement on the future of banking, and I love it. And it's three bank robbers that run into a bank, and they got their hoods on, and they're about to rob the bank, and the teller says, "Aren't you John Markle?" And he's got a hood over his face. He says, "How do you know that?" She says, "Well, your GPS system and your phone just told me that you came into the bank." And then he pulls his hood off. He goes, "Well, how do you know that?" And she says, "Well, because you applied for a mortgage 2 months ago." And she goes, "I just want to let you know that I've still got that 3.5% rate for you." I think one of the key challenges that I look for, and certainly, and I think banks are working with, what you talked about, is people come back into the branches. How are we providing the digital wherewithal for the humans standing, the tellers, the branch managers, to be able to be as savvy digitally in terms of the information on your clients? I'll address that one to you again.
Yeah, so I mean, as far as getting the staff savvy enough, that remains a challenge, because we encourage usage of our technology and our solutions amongst our team members, but they're at different stages in their lives, and they're not always able to speak to what a member is inquiring about, or what a member might need. So that remains a challenge. An anecdote that we've heard was a member lost her mother and came in to deal with the trust situation. And her comment was, I had this very nice 23-year-old young woman helping me out who had no idea what a trust was, or what this all meant. And I think the same thing could be applied to digital services. If we don't have team members and frontline staff who are not only conversant, but kind of well-versed and understand it all and use it themselves, I think that remains a challenge. And that's something that we're continuing try to solve. And maybe Matt has some ideas on that, because I would love to hear some solutions, because we haven't solved for that yet.
I think that's a great opening, Matt, in order to be able to talk at Sterling Bank and the experience, and talk to me about what the last 18 months look like as banks turned on a dime.
Yeah, I mean, I might go back a little further, right? I think our digital journey started probably early 2019, right? And what was interesting was, so just for context, right? Sterling Bank is predominantly located in New York City. What we do is, we primarily specialize in consumer lending, but on the deposit side, we've got a pretty mixed bag, right? We did a pretty big acquisition with Astoria Bank back in 2017, which doubled our size and then made us a $30 billion asset company. I would also mention we actually just recently announced that we're doing a merger with Webster Bank, which would double our size again, right? So hopefully by this time next year, we're a $60 billion bank, and we're talking about how much progress we've made in some of these areas that we're talking about. But I think our digital journey started back, when we were having struggles getting deposit relationships, right? And we talked about launching a direct-to-consumer bank, and then starting to leverage that technology into different parts of the business. I think what was interesting was the mindset going into that was very much hey, this is a test, right? We'll see how this works, right? I had the benefit of having done this before, right? So I kind of knew what to expect coming in terms of an output. But when you start to think about that, right, everything from the onboarding experience all the way through servicing, we started to kind of chip away at how can we create a digital experience, right, that basically removes our dependency on physical infrastructure. And so in doing that, right, we were able to quickly stand up a bank, right, in parallel to the bank that we have, and bring in, $500 million in deposits in, call it a 5 to 6 month time frame, right, with very little, marketing and just kind of doing a lot of test and learns. I think that got everybody thinking, hey, this is really where we want to go, right? This is a very interesting prospect here. And so what we did was we started to think through holistically what's our digital strategy going forward. I think the biggest hurdles that I've come across within doing that has been, having the wherewithal to back the investment for future, gains, right? Like there's going to be a loss in, making significant technology investments up front, and you're going to, kind of hockey stick to get those gains in the back. I think certain institutions, especially ones that are smaller in size, or ones like ours, which is a really big M&A shop, you're looking for instant gratification, you're looking for instant returns, right? Digital is a journey though, right? And that kind of leads to my second point, which is you don't build it and then it's done, right? It's an ongoing thing. It's a growing thing, right? It's like a plant, right? Like you keep watering it, you keep fertilizing it, you keep optimizing the experience. And so, having the wherewithal to put the team around being able to consistently look at, how is your digital journey evolving over time? Are you getting adoption, right? Are you having drop off in areas of the experience? Being able to use the data to make decisions, not just from an acquisition and marketing perspective, but also from a investment perspective, a product enhancement perspective, right? So I think for us, what we've been doing over the last, call it since we launched that bank, and that was right before the pandemic, right? And then we've kind of taken a pause to try and really think through how we build out the rest of this going forward. We've been literally going piece by piece throughout the journey, everything from account opening to servicing, and talking about what's our digital strategy around being able to stand up something that's self-sufficient and removes physical touch points. Everything from, infusing AI into, servicing, right? Everything from, thinking about a mobile application strategy and, do you want to build versus buy, right? And that involves owning the source code or, doing some of the things that, we were just talking about around like strategic partnerships, right? Or some combination of both. And so we've been on a journey ever since then, right? And then that introduces the topic of banking as a service, which you alluded to earlier. And that's where we thought we had a competitive advantage, right? We've got a pretty robust API catalog that we built out as part of what we were doing with some of the servicing and account opening aspects of things. We viewed that as an opportunity for us to kind of view banking slightly differently. And we break that into 3 buckets. One is banking as a service, where we're partnering with technology companies or fintech companies to give them access to our tools and products and services and our charter for them to, kind of go and do operations. Ultimately, the client from a banking perspective belongs to us. It's just a different type of relationship where you've got, kind of a different front end, someone who wants to own the UX, and we're responsible for, kind of like the back end banking system that powers that. that leads into this concept of open banking, right? Where you're posting your APIs into like a developer portal, right? And you're able to share information like data and enable others to do kind of the same, right? And we're on a journey to kind of get to that place too. But I think what's interesting about what we've been talking about is this third leg of that stool is platform banking, right? Where you're actually looking at the technology that they're providing and saying, can I actually take that in-house, right? And build that into my experience for my clients to be able to enjoy and gain benefit from, right? And so I think, a lot of what Ryan was saying is a very similar strategy to us, right? Looking at strategic partnerships and how we can connect through the magic of APIs, right? And build an experience that's seamless, soup to nuts, and gives us the ability to kind of deploy products and use better enhancements in products, right? From folks that are, 100% dedicated to building those things. It's cost efficient and it creates a really good client experience, which ultimately leads to adoption and deepening relationships, which is what we're all about, right? We're a relationship bank, and anything that we can do to kind of deepen relationships with clients, we're going down that path. So
I think that's a great summary and definitely interesting component of the accessible APIs. And as we look towards open banking into the future of it, I think many banks are going to become very, very tech savvy organizations. And I think to both states, I worked for Microsoft for a number of years, and we had a favorite statement, which always wasn't necessarily favorite amongst the employees, but it was eat your own dog food, right? So we were only allowed to use Microsoft products. At the time, there might have been better products out there. And that experience, and I think, and certainly ramping up, the human side, the operational staff within the footprint of the customer service area. What's your opinion in terms of looking at various overcoming friction in digital journeys and really trying to say, there was a great survey running through LinkedIn a couple of weeks ago. It said, if you work for a bank, should you have to bank with that bank? Right. And so I just kind of getting your on how you're looking at the engagement rate in those digital journeys, the friction, how do you monitor it? How do you what's your demarcation for success of a digital journey? And I'll go to Ryan first. Ryan, you're on mute.
Yeah, having trouble with the mute button. There we go. Elizabeth, I was reminded of another expression that's not webinar appropriate about the equivalent of eating your own dog food. So your question was attacking the friction of the digital journey, and it's something that we've struggled with. I'll be honest, because those of us who might be involved from the ground floor and in the early stages of it, we think it's great. We're part of the architects, architecting of it. We support what we've put together, and we don't realize the friction that we may be creating, or the various different ways that people are going to try to interact with this technology or this solution. So, market research is a must-have. I really like usability studies with non-technical, maybe even non-members. We do that with our website. We try to do it with other solutions, and I think that's key to understanding where the friction points are. I earlier this week was listening to another webinar about usability studies, and one of the researchers said, if you hear the same feedback 5 times, stop and fix it. And you don't need to keep researching it. If you hear it 5 times, that's enough. It sucks. Go fix it. And I think that was a real eye opener for me. And so we continue to look at how can we test products, but we also have to listen to what our customers or our members are saying. So we have a pretty, I think, robust listening channel where we consolidate the feedback that we get from our members, and we look to see, okay, are there patterns emerging? Are there things that we need to tackle? And we've made some good improvements based on that feedback.
Matt, from Sterling's perspective.
Yeah, I think so. Going back to your eating your own dog food analogy, right? I think there is a little bit of a psychological barrier to getting folks that work at the bank to give you their money, like their operating account. But I like to think that we could strive to get greater adoption in that area, right? But to your point, I think the technology that we're building in the business that I'm currently leading ultimately should be the technology that's used throughout the bank, right? There's no reason why you would have a different account opening experience just because someone did it in their living room versus they did it in a branch, right? And so that's one of the things that we've been thinking through is, how do you convert these processes and these technologies to create a seamless experience regardless of wherever you're at? Our view of that is we're saying, even for stuff like business banking, wouldn't it be great, right, for you to, as an independent, small shop, right, be able to open a business account with us in your, back room of your pizza shop, right? Or we can meet you in the boardroom of your business and do the same thing, right? Like, and you don't have to come in and kind of see us. So I think, creating those experiences for broader use, right, is kind of getting to that point of like, we should be using our own technology. Second piece to your other point, I think that, when you're measuring the success of these things, one of the things that I think companies tend to make a mistake on is you solve for the actual checking the box of the product, and you're not thinking about the client experience, right? And so, something as simple as like adopting Apple Pay is a really good example that I use a lot, where I go, if I have to pick up the phone and call you to verify the enrollment, it's done, right? Like, there's no, your drop off is going to be bad. It's just not going to work, right? And so, and we had that experience early on, and we were talking like, hey, let's run some campaigns around it. I'm like, you can run all the campaigns you want, right? But until we fix that piece of it, you're not going to get the adoption that you want. You have to have that mindset for every single thing, right? We have a whole team of folks that are constantly looking. I'll use account opening as a silo. Our account opening journey, where are you seeing drop off, right? If you're clicking apply now, that should be a pretty high probability that we should be able to get you through to funding, right? Are you dropping off in, some of the questions that we're asking for KYC, verification? Are you dropping off as part of the funding because it's too hard to figure out? And that's a combination of, honestly, it's UX design, right? Psychology of where you're placing things within the journey. But then it's also your products, right? What are your plugins there? Are you using Plaid, or are you using something else, right? Are you having to do out of wallet questions, or can you use a more streamlined, advanced way of verifying who the customer is, right? So I think the way we view these things, and that runs all the way through servicing, right? Are you getting adoption on bill pay? Are you getting adoption on, check capture? I thought the example that was given around check capture with educating folks on how to use that, I did the same thing with my mom, and it like changed her life, right? Like once I told her she didn't have to do that anymore. So I think that's the way you do it, right? And what we've been doing is really focusing on building the teams to be able to dissect the data, right? So getting the data is a big part, right? That's a foundational element. But building the teams to dissect the data to be able to make decisions on where you need to make improvements, that's huge, right? To me, the overlay on top of that is the NPS, right? Like, what feedback are you getting from your customers? And to that point, if you're hearing it 5-6 times, it's a problem, right? So usually those things reconcile with the data, but sometimes they might not, right? And you have to kind of use both of those tools to be able to make the decisions to make improvements.
I'm so glad you brought up NPS. I think my dream is to read in annual reports an internal NPS score. And I think I talked to, if you can't make 100% of your employees your clients, that's your first test base, right? Like I do think banks should gear towards to say 80% of our staff are clients of our bank, and therefore understanding our processes and build empathy into that. Some of the challenges certainly that, innovation in real time is super hard, right? That ability of existing product lines and businesses and how you're innovating in those can be a challenge. And I think really, if you go through, so much of great insights coming out from employees of banks, many times they've said it 5 times, right? Like, how does that feedback make it into the system? And I think, Sean, I'm going to jump over to you, because I think you've had the experience, really what I consider on the high end of a customer journey, certainly in the wealth management. And we've made great strides in wealth tech and KYC and the onboarding and ongoing regulatory management from a wealth side. What do you see happening there?
Yeah, big picture level, what draws me to what we're doing at Kapitalwise, I spent about 20 years doing strategic and business development in the wealth management and capital markets spaces. But it's amazing to me just what kind of power you can, what kind of market reach you can achieve with the correct marketing automation, and if you're digitally optimized. And you can almost draw a line between firms that are and firms that are not. And I think there's just a lot that needs to get done, particularly in the capital markets world, in terms of having the optimized digital interface for your clients. So this, for me, is our mission at Kapitalwise, is to help various businesses, get along to that optimization. And like Ryan mentioned, or maybe it was Matt, it's an ongoing process. So I guess you can never get all the way there. But I think there's a lot of work that can get done, and there's a lot of spaces where we fit in terms of helping companies take that first, steps 1 through 5.
Yeah, Sean, I think that's a great point. And I also just want to mention to our audience, for anyone who has questions and would like to interact with the panelists, please use the chat. You can also raise hand in terms of questions, and I'll keep those on a separate element as we move forward. Sean, you were going to add to that?
Actually, yeah, ask the first question to Ryan and Matt. But Ryan, I'm curious, as a bank, have you, or credit union rather, have you segmented consumers that you would consider to be digitally engaged versus more traditionally engaged? And do they look different from a profitability standpoint?
Yeah, that's a great question, Sean. That's a journey that we're on right now. We haven't reached our endpoint yet. We've just started looking specifically at our checking account holders, because we think that those are already going to be more engaged, and we're starting to evaluate their digital engagement with us. What we have found anecdotally so far is that our highest use checking accounts, and I'm painting with very broad brushstrokes here, but our highest use checking accounts tend to be our digitally engaged members. So those are the folks with direct deposit. They probably have their debit card loaded into a mobile wallet, and they're using our digital services more often than not. So all signs are pointing to our digital members are going to be more profitable for us, and it's the high touch folks that maybe want the high cost deposits and maybe not big borrowers. They're the ones who tend to come into a branch, and so those are our lower tech folks that are probably going to tend more to a lower profit margin for us. So broad brush strokes, that's what we're seeing, but I don't have complete numbers on it just yet.
Well, thank you. Same thing with you, Matt. Does that jive well with what you see?
Yeah, I think so. I'll just take it. I think it does, right? But I'll take it in a slightly different direction, because one of the things we've been talking about is this metric of all-in cost to serve, right? And measuring profitability that way, right? And so since we've got kind of multiple channels for raising deposits, what we're always looking at is at an aggregate level, what's the cost of a all-in digital relationship, right? Somebody who seamlessly banks with us digitally as compared to someone who comes into the financial center, right? And what we've seen is, while the digital bank tends to have a higher NIM, right? The net income level is a lot more profitable, right? Once you get down to the fact that there's no brick and mortar expense, the headcount is next to nothing, right? To kind of run that business, right? In comparison. So what's been interesting is we're talking about now this kind of dual strategy of the fact that we have this ability to do account opening now makes us kind of borderless, right? We can go all throughout the United States, right? And kind of solicit relationships. And the strategy is really more around acquire and deepen, right? And that's complementary to what we're doing in the financial centers, which is retain and deepen, right? And so I think those two things together, the aggregate metrics look pretty good. When you get to a product level, I think exactly what Ryan was saying, right? Like the checking is always the holy grail, right? But I do think that when you look at it holistically in terms of like you're adding your servicing aspects to it. Since we're leveraging a lot of the same technology from a servicing perspective, the total cost always tends to be much more lucrative for folks that are 100% digital versus, you know, folks that tend to adopt more in branch servicing.
I think that's interesting. They're both great answers. I more or less what I thought I might hear. What you're seeing, Gallup did a great write-up on this not a few weeks ago, but millennials in particular, it's not only do they want digital, of course, for almost everything, but they want all the digital in one place, and they're very clear on that. They detest friction, you know, in terms of moving between apps if it's unnecessary, and they detest friction in terms of you know, why should I have to go to a different portal for lending than I am in my wealth management? Mm-hmm. So it's going to be interesting, and you know, looking ahead, maybe even a bit of a winner take all, where you can talk about, to your point, Matt, any bank with a national presence can be competing for those relationships.
Mm-hmm.
And I think that's a good point that you raised, Sean. Also, certainly a more sophisticated digital customer is also a potentially less loyal customer, because as we educate customers more, they're being better educated on all of the different financial services that they have the ability to choose from. I think banks are really struggling in terms of keeping loyalty amongst millennials because they have that choice. They really are have low tolerance for friction. What are you seeing in terms of the stickiness, the traction in that age group? I'll ask Ryan.
Yeah. So Elizabeth, that kind of leads into this idea that I have, and I'm sure there's been articles about this, but I really think this idea of a primary financial institution, or PFI, is probably dying on the vine a little bit. As much as I try to deepen relationships with members, I know my products per member that I look at today are not what they were 20 years ago when I started in the industry. And so I have this kind of like this working theory that consumers are diversifying across multiple solutions. And so when you see so many easy applications for money movement, for example, you know, Venmo and Zelle and all those things, I think we're just seeing a disbursement of financial lives. And so I agree with what Sean said, that millennials and younger folks do not like the friction. I do have a slightly different thought, though, on going to different portals, because we're seeing in their behavior that they're using all these different apps. They certainly don't want to have to use 3 different apps when they're interacting with sound, though, sound credit use. So that's the rub right there. So yeah, I don't know if that answers your question, Elizabeth, but I think we're just going to see a disbursement a little bit.
Yeah, I think to that point, Ryan, one of the important things, you know, for where I look, and I used to bank, right? It used to be a verb. There used to be like almost a physicality to it. Mm-hmm. But I don't bank anymore, right? I pay a bill. I do this, you know, I insure. Sorry, my cat's about to walk across the screen. And so, Matt, as you're starting to build out digital journeys, and I think where I look at, and many banks are very product focused, you know, a mortgage, right? Mortgage comes because I need a house, right? A loan comes because I need a car, a business loan because I want to expand my business. And I'm looking at, certainly from the fintech side, of starting to disrupt that lower level of services. And I'm wondering what your roadmap is looking towards providing, you know, whether I'm a business, you know, that ability to integrate my accounting package directly into my commercial account, that ability to simplify my tax management, et cetera. So Matthew, in your vision as a banking as a service, where does that take you to?
Yeah, I think so. You know, what's interesting is, to your point, the products are the products, right? Like there's not at least I don't know of much innovation that's taken place with regards to like a CD, right, or a savings product. They're pretty much the same thing, right? There's not much material difference. I think where fintechs have started to figure out where they can play is in the experience, right? I can create an experience that onboards you, makes you feel welcome, and kind of get you into you know, feeling like you're part of this community, right? You can do things differently. that's where I think, the beauty of a lot of the stuff we're looking at with banking as a service comes into play. Or if you go back to my point earlier about platform banking, right? We look at things differently now, right? When you have the ability to connect other services, right? And connect with other service providers, right? It used to be that like, you think about things like mortgages or auto loans, right? And we're going, we don't like those assets, right? Credit cards, we don't like those assets, right? Well, I can do off balance sheet plays now, right? Where you wouldn't even know it as my client, right? Because it's built into my experience. I'm working with a company that's enabling the account opening, right? I'm responsible obviously for the KYC portion of that, right? But doesn't have to sit on my books, right? And I'm able to provide a wide range of products and services, right? So for me, I think the end game is, the ability to, onboard multiple services within one experience without necessarily having to have the burden of like being a master of each one of those services or each one of those asset types, right? And that's the goal, right? So a lot of what we've been looking at strategically is in our early versions of banking as a service partnerships is not only, can we provide a service to you? Can you do something with us, right? Can we take your application? Can we take your product? Can we build that into our experience to round us out, right? Because again, a savings product is a savings product, right? Adding on cool things to a checking helps, right? Being able to do, mortgages, auto loans, crypto conversion, right? Buy, hold, and sell, right? All of these things are now possible through the infrastructure that we're building, right? And so I think at the end of the day, if you look 3 years out, our goal is to have a completely robust package that offers a variety of financial services, and some could be with us, some could not, but the client has one experience, right? And they experience that thing and they're able to, quickly adopt new products, and that deepens our relationships.
I think that's a really good point that you raised, Matt. And when I was talking about, banking isn't a verb anymore, but I do need a banker. I need a banker from my personal, from a retail side. I need a banker from my business side. And how do you build out that experience in order to offer that service? And sometimes maybe in the future, it's not all going to be under the bank, but you're going to be the concierge and the best concierge in order to be able to find me the right products that are going to deliver the services that I need.
Yeah.
One of the things I think as we've looked at Kapitalwise and where our interest became is in order to do that, you need to have access to really good data. And that data comes from multiple sources. I think one of the biggest challenges organizations are trying to overcome is the siloed data. That's number one. And then how you actually get access to it to start to build that relationship. Sean, I know you're fairly new to Kapitalwise, but if you could talk to me really regarding what I consider to be almost data as a service. And if I look, long term, where I see Kapitalwise making that play, that ability to extract data quickly to build out your moments of truth, to build out those campaigns that now are engaging with different silos of data to make that kind of engagement.
Yeah, and even with the most innocuous types of engagement, you can draw some pretty specific conclusions, and that's kind of what's cool about what we do. Just take an example: if we have a client bank that has our mortgage calculator, as part of their typical client app, banking app, and the client happens to use it, say 3 times in the month of June. Well, that's a data point for us, right? And we can pull in third-party credit services, and we can also notice in July, perhaps, that there was multiple credit inquiries from competitive lenders. Well, you pretty much know you have a client that has a relationship with your bank that's very much in the going to be purchasing a home, certainly looking into home financing options, and like, what can you do with that information? And what we do, and we put this in place for numerous organizations, is basically, given enough data points, let's send an automatic email. Let's target an email, maybe even to their specific demographics. Let's track the engagement from there and then decide to re-engage in other ways. That could be maybe a nudge on the app itself, or another email, or direct mail. There's many ways you can go with that data, but these are two very, the example of a credit inquiry and the example of a digital tool use that's about as basic as you get. You can get a lot more involved in terms of drawing pretty specific, very accurate representations of where your clients are and what their interests are like right now and what you should be talking to them about. So that was one of the more exciting things that Sajil had been doing at Kapitalwise. I think the deeper we go in with our clients and the more I think that both sides can be committed to building a robust, I'd say, data integration structure, the more, the better they're going to be able to serve their clients, and the more accurate and meaningful the marketing will be.
I love that component, Sean, because I think that the ability, sometimes I feel like we're boiling an ocean on the digital side, and I'm convinced a lot of the marketing heads, digital heads, and CIO heads are overwhelmed by it. And that ability to look at creating those particular moments through accessible data. I know certainly in my work with banks and a lot of historical legacy on conservatism regarding how data is used. And therefore, certainly, peeling off potential layers and working with third parties to do that integration to get the insights back. Potentially also looks at resolving the educational component of using the data, the compliance aspect of using the data. Let's face it. I mean, if a bank was using data the way Facebook or is using it, or Amazon or Google, right? Banking would be a whole different experience. But I guess I'm kind of curious on both Ryan and Matt, like, what do you think what do you see in the short term as one of the most exciting digital journeys that you can actually see getting access to data, and what part of that business is it going to be affecting? And I'll start with Matt first on this one.
Well, it's interesting, so as we're talking about this, right, I'm thinking about a partnership that we have with Google, right? And so we've signed up to work with Google to be one of the featured banks on their Google Pay platform, their Plex account, right? And
congratulations on that.
What's interesting, yeah, no, that's great. And we're super pumped about the opportunity to do that because it gives us a broader reach to different clients that we potentially wouldn't have gotten, other than through that relationship. But what I think is so interesting about that is, yes, there's the component of like, hey, you're partnering with Google, you get this thing, but what's in it for Google, right? What's in it for Google is the data, right? Like now, if you have the ability to see someone's checking product, right? Like, a tremendous amount about that person, right? You're able to use that information to market different products and services. And I'm not trying to get big brothers watching on you or anything like that, right? But I do think that's the truth of the matter, right? Is the goal for us should be to, understand exactly what's going on with our clients and be able to position them with tools that can help, right? That's a good product, right? As something that's going to like provide a service or help you, right? And so when I think about these journeys, right, very similar to what I believe Google is doing and what other, kind of Apple is doing the same things, and a lot of what they're doing with their credit card offerings and Apple Pay, right, is being able to deepen a relationship with clients by having access to data, right? And so we're doing the same thing on the digital bank side. We're saying, okay, how do we use this data to be able to position different products and services, learn more about our clients, right? And the entire focus is around building an infrastructure of data that enables us to get that visibility, right, to make those decisions. So I think in any of the journeys that we have, right, that's a really big piece. But I also think there's two areas of monetization that we could talk about too, right? Like, so if you think about on the commercial side, treasury management services, right, for businesses, information reporting has always been a very big revenue generating opportunity for banks, right? The ability to understand and sell back data, right, to your clients, right, for them to be able to use. I view the same thing as the future of where banking as a service is going, right? Is for us to be able to take the learnings that we have as a banking institution, understanding the transactional data, packaging it, and then selling it back to our fintech clients, right, who want to understand better how they can deepen their relationships with their clients, right? So I think there's really good monetization strategies around data, both for deepening relationships with your clients, but also then being able to package that back to your other forms of clients, whether they be financial technology companies or businesses, right? So I think that's a huge play for us going forward.
Absolutely agree with that. I mean, in my perspective, checking account should not be a fee-based account. The amount of data that you're pulling from there allows you really to significantly upsell products.
Right.
If you can get, primary deposit in terms of payroll deposit in there, you have a lifeline of information to work from. So Ryan, what are you seeing there on unique digital journeys that you're building with data today, and where do you see them going in the future?
Yeah, I'm going to focus a little more on, I think, the consumer accounts, and I'm going to pull from what Sean talked about and what Matt talked about. I think that right now we're working on consolidating all the information we have about our current members, clients, into a data warehouse, and we're looking to see what insights can we pull from that, with our focus being on deepening the relationships and retaining the accounts, right? One of the pitfalls that I've seen is really cool data crunching, great insights, and then it gets handed to marketing. Here, do something with this, and it's a big problem because we need to build out the entire journey to do something with that data. So I think marketing really needs to be part of the conversation early on and building out the strategies. So I think mining what we have about our clients or members is really important, and there's a trove of information there. Sean mentioned bringing in third-party information like credit reports. Like if there's a recent pull on a credit report, that could be a really informative trigger for us. Oftentimes when we do that, we find that those are too late in the process. It's after the member has already made a decision. So we're actually talking with Experian now to see what else they can do to help us understand what the member's doing. And then Sean also mentioned pulling in what the member's actual activity is on our website. And so we today are able to track how members engage with us via email on our website. That doesn't talk to their account relationship though right now. And I think that would be an easy win and a great place to start. And that's where we can try to start to meet the members where they are. And Elizabeth, in your opening diagram, I forgot what you called the little green area. Was it the moment of truth? Yeah. If we can meet the members at that moment of truth, that's golden. I mean, that's what marketing is all about. It's trying to meet those members there. So I think a lot of the information is there. It's how do we get it and how do we apply it? We just went through a proof of concept with a partner, an AI partner, where they do some analytics of our checking account behaviors and put together insights that can be shared with our members. And these insights are developed by behavioral scientists trying to encourage deeper engagement and build habits. And I think that's a really interesting concept for us. And I'm going to be curious to see if we can take that concept to market and actually drive some deepening of the relationships. And I think that might be a really interesting application of the data and the analysis.
Yeah, I agree with that. And I think on the behavioral side, a couple of great examples, certainly of even companies that offer in-house retirement savings plans, right? Like when they offered that out to employees, they got a 20% uptake on it. When they turned around the conversation, which was, in your interest, and even some that were making matching, was that ability to say, we're planning, we're helping for your future, you're automatically registered unless you opt out, right? And then all of a sudden it was like an 80% subscription rate. I think it's overcoming those decisions. I mean, they've done it also in terms of signing the back of your driver's license as a donor. So many countries, you're automatically a donor unless you opt out, right? I think it's understanding what that decision-making process is happening as they're processing that data. I mean, I think to Sean's point regarding have access to data points regarding a customer search for a home. I did say home, not a journey, not a mortgage. My seamless kind of Star Trek level experience, right? I see the for sale sign. I stop with my husband. I've fallen in love with this place. I'm walking up the steps and my bank is already calculating my affordability of that house, right? Before 5 next bids come in on a competitive offer, that I'm covered, right? You got my back. I got this house. So, and I look and that data is accessible today. And I would love to see banks really pushing harder on it, because I think that there's competition coming from other areas. And where I look and I say banks certainly have the depth of resources in many cases to put the spend in there. So I really want the banks to win that journey. I think it's owed to you, right? I think you've invested with us for the last 200 years in terms of building that infrastructure and that ability to leverage it. As we come down to time here, I really, it's been a wonderful journey with the two of you. Three of you actually, Sean. I apologize. Sean is part of the family. I look, so, and I haven't necessarily seen the questions coming through. Maybe I'm missing them, but I think Shauna, I'd love to turn it over to you to get your parting thoughts on really where you feel that what Kapitalwise is doing. And I as I said, I really look from a broad-based executive experience and the conversations that you're having. Where can that impact happen?
Sure. Thank you. I would say the answer is quite a bit different than it would have been maybe my first day or two with Kapitalwise. I had assumed that most banks, would be a 7 or an 8 or maybe a 9 or a 10 even as far as advancements with this. But frankly, the ones I've been talking with, I'm seeing more 2s and 3s and 1s. Where they're just starting to kind of recognize the power of kind of harnessing the digital data you can, potentially integrating some third-party data, but just keeping it very simple. You can connect some dots that you already hold and make marketing automation and digitalization optimization very doable. You could be a substantively better financial institution in pretty short time. But that's been refreshing for me to see. There's value to be added for these institutions from companies like Kapitalwise. And depending on the client, this is a little overly broad, but they generally fit into three maybe cycles of implementation. I would say the first step is to integrate our tools or let Kapitalwise help them build their own proprietary tools, such that you can draw client insight off of those tools. And then the second component of it is actually getting in place a marketing automation system. Think like a Marketo or a MailChimp, but times 10. We're going to actually integrate all the data that we can and start sending out some smart marketing messages. That could be via email, it could be phone calls, texts, direct mail, you name it. But the point is, you're kind of like being Johnny on the spot when they need you, or even before they need you, to Ryan's point. So I think that's step 1 and 2. And we're basically, with 90% of the clients we're speaking with, we're in one of those 2 zones. Step 3, and I think this is where it gets really interesting, is where you're talking about going out and getting some robust third-party data. Something that's obviously compliant, something that everyone's comfortable with in terms of what it brings, but start really getting a 360-degree look at your customers and how to get in front of what they're going to need next. So I'm really excited. I think in this era of lack of privacy, hopefully a lot of this will get sorted out where we can everything's on the up and up, but we can also be much like the Googles of the world have been now for 10 plus years. Way in front of the market in terms of client insight. And I think that the banks who achieve that first are frankly going to quickly crowd out the ones that don't.
And I think on a rapid fire here, I'm going to have you think, when's your last moment you had aha in digital experience? And I'll start with mine. I bought a rather expensive pair of shoes from a retail store. Very shortly after, I got a note saying, geez, Liz, you have great taste. And as a woman who loves shoes, I swear I was blushing. It was an aha moment. Over to you, Ryan. When's the last time you had a digital aha moment?
That is a great question. And, the thing that comes to mind, I've already mentioned, but I just want to go back to it. From the product management side, when you hear a complaint 5 times, fix it, make it better.
I think that's a great one. Matthew, over to you.
I think when I walked in the Apple store and I got an alert on my phone that said, welcome to the store, how can we help you? I was like, okay, that's creepy, but very cool.
Very nice. And to close off, Sean?
Yeah, I just recently actually had to return a grill, like one of those Komodo grills. And anyway, but somehow, someone got information on that. And I've had nothing but like these beautiful advertisements for Komodo grills for the last 2 weeks coming to direct mail. But yeah, it's an information society we live in. So I used to maybe be a little bit offended by it. Now I'm just impressed.
Yeah.
I want to thank Kapitalwise. I want to thank Ryan and Matthew for bringing this together. Really appreciate your time today. It was a pleasure hosting this conversation. And I'm just excited about what's coming forward. Honestly, I can't wait. Sean, I wish you a wonderful afternoon. Thank you so much. And thank you to everybody out there who's been listening. Really appreciate